Hi, this is from MSR Educational Academy. Today we discuss the company accounts. There is a format of balance sheet. On the format of balance sheet, this is only the under the balance sheet. First one, equity and the liabilities. Okay. Before that, first balance sheet format, that is name of the company and the balance sheet asset. Okay, comparing to sole proprietorship balance sheet, it is differ. Okay, different, fully different balance sheet format. Okay, in this balance sheet, actually in sole proprietorship balance sheet, heading is balance sheet as on, but if you come to the company accounts balance sheet, that is balance sheet asset. Okay, we should be mentioned as it here. Okay, and the next one from balance sheet format is, that is particulars, notes to number, and the end of the current year amount in rupees and end of previous year amount in rupees. Current year and previous year, as per the question, we should be write the amounts in the particular column. Means if it is current year balances and previous year balances, if both the balances is given, you can use both the columns, or otherwise single column is enough. Okay, but format is this one. Under this format, first one, that is equity and liabilities. All the equity and liabilities, first of all, we should be right. Okay, and under equity and liabilities also, under equity and liabilities, there is prescribed format and prescribed headings are there. So we should be use this are the headings only. Okay, except this one, we should not write anything in the balance sheet. Okay, for example, there is a first one, there is a shareholders funds. Under this shareholders funds, share capital, reserves and surplus, money received against share warrants. These three all comes under shareholders funds. For example, share capital. The share capital, there is a preferential share capital and equity share capital. So for this preferential and equity share capital, to show the equity and preferential share capital, we should be prepare notes to accounts. Okay, that is notes number here. Okay, that is a working note. Okay, here the working note we call as notes number. Okay, that is a notes number. Okay, we should be write notes number, we should be write straight to the particular head. Okay, for example, if you prepare share capital, whatever the items comes under share capital, that is a number we should be right here. For example, if you go to the share capital heading, this is only the notes to accounts, that is share capital heading. So under this share capital heading, that is authorized share capital. Okay, issued share capital, subscribed share capital, called up capital. Under called up capital, from called up capital, we should be deduct call scenarios and share for future account also. Okay, these are the adjustments. Okay, these are the one we should be prepare notes to accounts. We should be prepare notes to accounts. Okay, this is a separate working note like that. Okay, here the working note is here, it is called as notes to accounts. Okay, like this we can prepare for notes to accounts for reserves and surplus also. Reserves and surplus, there is a capital reserve, capital redemption reserve, securities premium, like this. So on all resources comes under reserves and surplus. So these are the working notes to accounts we discussed later on. First of all, we have seen, we can discuss the balance sheet format. Yeah, back to balance sheet format. So this is the balance sheet format under share capital, resource and surplus, money received against share warrants. Okay. Next, share application money pending allotment. Share application money pending allotment. Next, after share application money is pending allotment, there is non-current liabilities. Non-current liabilities. Under non-current liabilities, there is 3 separate heads, that is long-term borrowings, deferred tax liabilities, other long-term liabilities. Other long-term liabilities. Under these long-term borrowings, okay, that is a borrowings is borrowed from other financial institutions. Okay, financial institutions as a loans like that. Okay, so that is a long-term borrowings. We should be right under non-current liabilities. Okay, so long-term means it is more than 1 year. The loan has taken for more than 1 year purpose. That is long-term here. So like debentures also is comes under long-term borrowings. That is the heads. The items comes under long-term liabilities. That is long-term borrowings. We discussed under notes to accounts. I have clearly given the notes to accounts for each and every required heads. Next, deferred tax liabilities and tax liabilities, that is deferred one, and other long-term liabilities. Okay, which are other long-term liabilities is comes under other long-term liabilities. Okay, that is a liability is more than 1 year. Next, current liabilities. Current liabilities. If you come to current liabilities, there is short-term borrowings, trade payables, other current liabilities, short-term provisions. Okay, finally it is total of liabilities only, that is equity and liabilities. Total of equity and liabilities is the total. So if you come to the short-term borrowings, there is a borrowings amount within 1 year, that is short-term duration. Next, trade payables like sundry creditors and bills payable like that. That is comes under trade payables. Next, other current liabilities like that outstanding expenses. Okay, income received in advance, like these are the expenses. Okay, and incomes we can comes under other current liabilities. Next, short-term provisions. Okay, the provisions related to short-term period, that is short-term provisions. Short-term provisions is comes under current liabilities. Okay, this is only the equity and liabilities. Equity and liabilities under balance sheet. So this is part of liability. Okay, part of liability. Next, if you come to the assets, here only there is assets, that is assets. If you come to assets, under assets, first one, non-current assets. Under non-current assets, that is property, plant and equipment. Property, plant and equipment. Here we can call the one is fixed assets also. Okay, so the property, plant and equipment. Next one, it is tangible assets. Actually here we called as fixed assets. That is fixed assets. Okay, we can write fixed assets heading also. Okay, fixed assets. Under this fixed assets, first one, tangible assets. Tangible means plant, machinery, equipment. Okay, so that is all those ones is comes under tangible assets. Furniture which can be see and touch. Okay, that is only the tangible assets. All those tangible assets we should be right under tangible assets after deducting depreciation of the year. Okay, after deducting depreciation of the year, that is only the amount we have to be right under tangible assets. Next, intangible assets. Intangible assets means that is goodwill, patent, copyrights, trademarks. Okay, these all those ones is comes under intangible assets. Under this intangible assets, uh, goodwill, patent, copyrights. Okay, we should be right. These are the amounts after deducting amortization. Okay, that is depreciation on intangible assets is called as amortization. So that is after deducting, that is amortization, then that is the amounts, remaining amount we should be right under intangible assets. Okay, so this is also we should be for tangible assets and intangible assets we should be prepared. Notes to accounts. Okay, that is a working notes is comes under notes to accounts. We should be clearly mentioned in the notes to accounts. Next, capital work in progress means that is a land, building, furniture. Is there any work in progress? Okay, under working process, that is capital work in progress, which that is the amount we should be right under capital work in progress. Next, same as intangible assets under development. Okay, intangible assets also is there any under development? That is also is comes under intangible assets under development. Like it is that is application to copyrights. Okay, taking application to copyrights or trademarks. Okay, for if it is the intangible assets, no, so maximum patents rights taken on, that is medicines. Okay, so like that one. So that is if it is there any under process, that is amount whatever is the expenditure on that amount, we should be right under intangible assets under development. Next, non-current investments. Next, deferred tax assets or long-term loans and advances. Next, other non-current assets. These are the non-current assets. Okay, so non-current investments means that is invested, that is a company in any amount is invested in companies as a share purchase of shares. Okay, purchase of debentures, that is amount is comes under non-current investments. Next, deferred tax assets. Okay, next, that is a deferred tax assets also is comes under non-current assets only. Next, long-term loans and advances. Long-term loans and advances. So this is the long-term loans and advances the company has given to somebody. Like that is example is employees. So employees to the employees, any loans and advances provided by the company, that is the amount is long-term. That is a that is amount is comes under long-term loans and advances. Next, other non-current assets. So other than these are the above the one, is there any non-current assets? We should be right under other non-current assets. Next main heading is current assets. If we come to current assets, the first one is current investments. That is the invested amount in the companies or shares or some government bonds. Okay, invested amount within 1 year. Okay, within 1 year, the time lapse in within 1 year. That is the amount is called as current investments. After that, inventories. Inventories means that is related to material stock. Okay, that is the inventory, that is the closing stocks, we should be right under inventories. Okay, so what are the inventories we have seen under notes to accounts. Okay, we clearly discuss under notes to accounts. Next, trade receivables. Trade receivables means here like it is a bills receivables and sundry debtors and bills receivable, that is the amounts is written after deducting bad debts, like that, so on. Next, cash and cash equivalents all the cash related items we should be write under cash and cash equivalents. That is, a related item means it is balances. Okay, cash and cash balances, cash equivalent balances we should be write under cash and cash equivalents. Example is cash in hand and bank balances and check amounts. These are the cash and cash equivalents. So that is the amounts, total amounts we should be write under cash and cash equivalents under notes to accounts. We should be clearly mentioned in notes to accounts. Next is short-term loans and advances. There is a company has given short-term loans and advances to somebody, either it is employees or directors or so and so on. So that is short-term loans and advances comes under current assets. Next, other current assets. Other current assets. So that is prepaid expenses. Okay, accrued incomes. Okay, prepaid expenses, accrued incomes comes under other current assets. Okay, this is only the overall balance sheet. Okay, after the other current asset we should be total it. While preparing problems, you don't need to write all those headings in the examinations. So as per the question, which heads is there in that related question, that is only the heads you should be write under examination. For example, if it is a balance sheet, so share capital definitely is there, and reserves and surplus also maximum, and the share application money pending allotment, it is one of the heading. So you should be write this is the heading. Definitely, is there any amount in the question or not? Okay, that is not a matter. And the non-current liabilities also you should write the heading. And the long-term borrowings, is there any long-term borrowings? Then only you can write this is the head. Okay, this head, or otherwise no need. Deferred tax liabilities also. Is there any deferred tax liabilities mentioned in the question? Then only you can write this is the heading and write that is the amount straight to the one. Or otherwise no need to write this deferred tax liabilities. And other long-term liabilities. Okay, is there any other long-term liabilities? Then only you can write this as a heading. Like this, so on up to end of the balance sheet. Is there any related particular item? Okay, balance sheet items and a particular head items, then only you can write in the examination, or otherwise no need to write these particular heads. But main headings you should be write, that is the main headings I have given a numbering to the one, that is equity and liabilities. After that 1 2 3 4, okay, these 4 heads. And if you come to the assets, that is non-current assets and the current assets, these are the headings are important. Okay, after that, so as per the question you can write remaining heads. Okay, these are only the overall balance sheet discussion. Okay, once you can, this is read it once. Next one, we discussed that notes to accounts of each and every head clearly. That which is not very important in the examination. Okay, which are very important to the examination, that is only the headings, heads we are discussing now. Okay, we continue. This is the video. First one, notes to accounts, share capital. First one, share capital. The share capital, authorized share capital. Okay, in this authorized share capital we should be write equity and preference. Equity and preferential share capital. So whatever the authorized share capital of equity and preferential share capital, we should be write under this one. Next, issued share capital. In this one also equity and preferential share capital you should be write. And subscribed capital also you can write equity share capital as well as preferential share capital. And called up capital, under called up capital also you can write equity share capital separately and preferential share capital also write separately the one. And from called up capital, less calls in areas and less share for future accounts, these two amounts we should be deducted. Then you will get sum of the amount, that is only the amount we should be calculated it. Okay, this is the authorized share capital, you cannot consider as a calculation. And issued share capital also, okay, don't add to total, and subscribed capital also don't add to total. But so whatever is the called up capital after deducting calls in areas and for share for future account, that is only the total amount. Is there any paid up capital? Paid up capital, that okay, is there any paid up capital, that is the amount we can calculate it. Okay, in that situation there is no calls in areas and maybe there is no share for future account. Okay, these two accounts may not be there in that situation. Okay, so this is only the share capital, head of first head of the capital is share capital. And next second one, reserves and surplus. Reserves and surplus. Under reserves and surplus, these are the reserves we should be write under reserves. So there is capital reserves, capital redemption reserves, securities premium, debenture redemption reserve, revaluation reserve, and finally there is a profit and loss statement profit, that is a surplus amount we should be write under reserves and surplus. And less preliminary expenses, and is there any preliminary expenses in the question, we should be write as a negative value in this question. Okay, so these are all are plus values, no? So this is the minus value. So from plus value you can deduct the minus, then you will get the total. Okay, so and a very important one, is there any loss in the profit and loss statement? Then that is a loss. Okay, you should be shown as a negative value only in this amount column. Okay, that is the important point. Okay, that is the important point in this one. Is there any losses? You should be deduct one, okay, from reserves and surplus. Okay, in that situation, if it is negative value is more, the reserves and surplus negative is more, then for example, so all reserves and surplus is all, for example, reserves and surplus, there is general reserve, example 10,000 is there, and loss from profit and loss statement, for example it is 15,000. There is no other reserves. In this situation, this is loss, no? So negative it, so negative value, then 5,000 only the negative value, so that is total. This is the loss, negative value we should be write under balance sheet and deduct from liabilities amount. Okay, so whatever the liabilities under balance sheet, okay, deduct this 5,000 from remaining amounts, simple one. Okay, don't be confused, more the students confusing in this situation. Okay, and next one, and the preliminary expenses also is that same as you can deduct from the total amount, that is only the key point. And as related that point, I have given a note also, please be write this is the note. And discount on issue of shares and discount debentures adjusted in reserves and surplus also. Okay, very important point. Not only preliminary expenses, is there any discount on issue of shares and a discount on issue of debentures? That is a discount amount you should be write as a negative value under the reserves and surplus. Okay, that is the amount simply we can deduct from liabilities amount. Okay, please be remember these points, very important points. Actually, as per this company accounts, no company has any issued shares with discount. Okay, but except some situations is given, we discuss under in that situation, that is a company accounts share capitals. Okay, no problem, but there is the provision is there, we discuss the provision at that time. Now you can remember this one. Okay, and after the one resource and surplus, there is third one, long term borrowings. Very important head is long term borrowings. Under long term borrowings, there is bonds, debentures, and which is related to long term, means more than 1 year amount. Okay, more than 1 year borrowings only we should be right under long term borrowings. There is bonds, debentures, term loans, deferred payment liabilities, deposits. Okay, deposit means the public deposited or employees deposited somewhat amount in the company, so for future security purpose, that is a deposits also. If it is a long term, that is comes under long term borrowings. Okay, not we are deposited, not company deposited amount, other persons amount deposited in the company, in our company. In that situation, the company, to the company point of the deposits amount is a liability only. Next, long term maturities of finance, that is a lease obligations. Next, loans and advances from related parties. Next, other loans and advances. So these are only the long term borrowings. Next, after that, very important heading is long term provisions. That is employee benefits, gratuity, provident fund. Okay, main important one, it is employee benefits only, that is related to gratuity and provident funds, and other long term provisions we should be right under long term provisions. Okay, these are two only. In this head there is only two. After that, next head is short term borrowings. These short term borrowings, loans repayable on demand, loans and advances from related parties, the deposits which are related to short term. Okay, this is long term, here it is short term, within 1 year. And the other loans and advances, that too related to, is there any short term items, you should be right under short term borrowings head. While doing problem also, these are the heads, they should be prepared separately. And same as numbers, we should be right under balance sheet. Okay, for example, long term borrowings, there is a 3 number now. So under notes to accounts, long term borrowings, under state to notes to accounts, we should be write 3. Like this we can write numbering also. After short term borrowings, trade payables. Okay, trade payables. The trade payables, that is sundry creditors, and the bills payable, and corporate dividend tax. These are only the trade payables. Very important one. And next one, other current liabilities. That is under other current liabilities, other than above the current liabilities, all those liabilities comes under this head. That is interest accrued but not due on borrowings, accrued interest, income received in advance, unclaimed dividend or unpaid dividend by the company, bank overdraft, provident fund payable amount. Okay, PF amount, it is comes under provisions. Okay, long term provision or short term provision, but if it is a payable due amount, then it is comes under provident fund payable. Next, ESI payable, Next, VAT, central sales tax, that is amount is payable. Outstanding expenses means outstanding wages, outstanding salaries, outstanding rent, outstanding rent, okay, outstanding interest. So all our outstanding expenses which is comes under other current liabilities. Next, advance received from customers. Advance received from customers is comes under other current liabilities. This is the very important head. So I segregated every item, okay, which item is comes under which head. For this next one, short term provisions, provision for taxation. Next, proposed dividend, provision for taxation and proposed dividend. Next one is tangible assets. Okay, up to this short term provisions, liabilities is completed. Next, if we come to the assets, under assets, first one is tangible assets. Under tangible assets, greenhold premises, machinery, furniture and fixtures, computers, vehicles, that is motor car, land and building, plant and machine equipment, and office equipments. All those ones is comes under tangible assets. And these are the tangible assets we should be right after deducting depreciation. Okay, you should remember after deducting depreciation the amounts you should be right. Okay, that is tangible assets. Under fixed assets, first one is tangible assets. Next one is intangible assets. Under intangible assets, goodwill, brands and trademarks, computer software also is comes under intangible assets. Mining rights, that is the rights on the minings. Next, publishing titles, copyrights. Next, patents, intellectual property rights and services and operating rights. Next, license, models, designs, formula and prototypes. These all are comes under intangible assets only. For purchase or to taken, this is the licenses and these are the ones the amount is comes under intangible assets. On intangible assets, we should be maximum we deduct amortization. Is there any amortization? Like the amortization amount from a particular intangible assets, and on that you can on that particular item and deduct the particular amortization amount and prepare the one, and then only you can write remaining amount in the intangible assets column. Next, non-current investments. Under non-current investment, trade investments, investment in equity shares, investment in preferential shares, investment in government securities, investments in debentures, investments in bonds, investments in mutual funds, investments in trust securities, investments in property, investments in partnership firms, other non-current investments, investments in trust securities. So these are the investments is comes under non-current investments. Next, long-term loans and advances, that is capital advances, security deposits, loans and advances to related parties, and other long-term loans and advances also comes under long-term loans and advances. Next, if you come to current investments, investment in equity shares, investment in preferential shares. So if it is a long term, write under non-current investments. If it is short term, comes under current investments. So as per the nature of long term or short term, that's we should be segregate the amounts. Next, investments in government securities, investments in debentures, investment in mutual funds, short-term investments, investment in trust securities, investment in bonds, investment in partnership firms, other short-term investments. Next, very important one is inventories. Under inventories, first one, raw materials, work in progress, finished goods, stock in trade, stores and spares, loose tools, goods in transit, others specify in the nature, that is specified related to inventories, that is all those inventories, closing inventories, we should be right under inventories column, inventory head. Closing inventory of raw material, work in progress, finished goods, stock in trade, stores and spares, loose tools, goods in transit, and other. So maximum in the question, is there any closing stock also, we should be right under inventories only. Closing stock, is there any closing stock, right under only closing stock. Right under inventories only. Is there any only closing stock, right under inventories. Okay, please be remember. And next important head is cash and cash equivalents, that is balances with banks, checks, drops in hand, cash in hand. Next, cash at bank also is comes under cash and cash equivalents. Next, is there any other current assets? Other current assets is comes under prepaid expenses and accrued income. Examples of prepaid expenses is prepaid salaries, prepaid rent, prepaid electricity bill, like that, so on. Accrued income means outstanding incomes, that is accrued rent, accrued commission, like that, so on. So that is other current assets. These two is other current assets. Okay, these are only the overall balance sheet heads, should be prepared, these are the heads. Okay, and in the next video we can meet in the next video with profit and loss. There is a profit and loss statement as per Companies Act 2013. Thank you for watching this video.